This is the story of a company that has its roots in southwest Colorado. A story about two college friends who founded a local business, of their families and the families of their staff, and of generations to come. It's about the concerns we hold, the passions we share, and the bonds that unite us. We are the Wells Group, and for 3 decades, we've been proud to be a part of the southwest Colorado community.
I have to tell you, it wasn't college. I was 15, John was 17 or 18, he got beer, and that's all I'm telling you. It's been a great ride, and here's to John and what we've done for almost 30 years now. Okay. I am Jim Watkins. This is the 14th annual real estate forecast, you can believe that. And first off, I want to recognize the people that do this. John and I get a lot of the recognition, but the people that do it are the staff and brokers at the Wells Group. So could I have all you guys stand up for me? So these are the guys that invited you. These are the people that make it happen. We call it the circus at work, and we have a new ringleader. Gage Sippy has decided to be the ringmaster. He's our new sales manager, and I'd like to recognize Gage too, wherever he is. The other folks that are making this happen, there are 7 sponsors, not in any particular order, but these are big leaders in our community, and they help us in our day-to-day business. First National Bank, Bank of Colorado, Alpine Bank, Wells Fargo Home Mortgage, American Ag Credit, Sonora Residential Mortgage of Colorado, and Cobalt Mortgage. Thank you guys so much for helping us out. I can't remember all this stuff. I have a cheat sheet. It's going to be online. The whole thing's going to be online again. Get in touch with us at the end of the presentation. We'll give you the little secret password. WellsGroupDurango.com. The whole printed thing will be on there, and there'll be a video of this thing as well, just in case you didn't get that. I already talked about this being 14 years. Bob has been a part of it for all of 14 years. We'll talk about him a little bit later. We're changing it up tonight. There's going to be a bit of a debate between John and Bob. We're letting John go first. So without further ado, thanks for being here, John Wells.
I don't need notes. I'm going to make this up. You know that, because I borrow some money from him and her. So they all know that, right, Shannon? We just give them stuff. Did you guys know that? You can just give them stuff. And that's the great part about today, right? It's kind of back to the old days. You're not laughing very much, but we're going to go on here. No, but we have to go back a little bit here. Because for 14 years, Bob Allen, who Jim and I have known for 25 years, he was right out of junior high, and he came here and decided to get into Durango and started with his brother in the engineering field, and then quickly transcended to the appraisal field, and we have the pleasure to have his knowledge and his detailed perspective for the last 20 plus years, so that's the great part. And that's your benefit, hopefully, tonight. As Jim said, this will all be available to you because there's a lot of detail. Not in mine, because I just threw my notes away, but in Bob's. Okay, we want to do a little recap because what we've done, and when I say we, this is the Wells Group brokerage, we do get consensus. It is not easy with 44 brokers to get consensus, but we try to get consensus of what we're going to predict what we expect to happen. But last year, we felt that we would see 920 residential sales in Plata County. And in fact, Bob gave me this little tool. We had 1,155. 20, that's the entire La Plata County market. That's a substantial increase, 28%. Pretty healthy increase. We predicted, which is a prediction. We could talk to all the economists at Fort Lewis up here, and are any of you here? No, I can tell you we do as well as they do, okay. But predicting is very difficult to do in an appreciation sense, and we felt that we'd see 5 to 7% increase in appreciation of real estate. We actually saw 3.5%, but let me explain this to you. That 3.5% was of all real estate. That's land, farm, ranch, commercial, residential, all types of residential. And what happened really is in this 3.5, there was close to 7% increase in-town residential values. There was about 5+% increase in residential values close and near Durango, near the workforce, near jobs, near services, schools. And so when you average that down, some of that is raw land, which has still been struggling through 2013. So nonetheless, we are below the 9% national average. And I will share with you that the 9% national average was a bit of a honeymoon because of some major markets, major urban markets. If you look at southern Miami, or excuse me, southern Florida, southern California, Phoenix, greater Phoenix area, even the Front Range in Colorado, they had substantial increases that helped influence this increase to 9%. Employment increases. Last year we said we do feel that we'll see major benefits and increases in improvement in employment overall in La Plata County, in all sectors. And it did happen, and did occur. And you'll see some of these statistics as Bob gets into his details, but I think he will. Maybe he'll agree with me, maybe he won't. But also in the building trades, we certainly felt that we were undersupplied in building trade expertise and services, and we felt there would be a substantial increase or employment in that sector, and that certainly was on target. So in 2013, we felt there were some challenges. And the challenges we predicted last year that under $450,000 residential property, countywide, would see a substantial reduction of inventory compared to demand. And that occurred. We felt, as we just mentioned, the construction and trade workers, that great services that create that product for us, would be in high demand and low supply, and that did occur. And unfortunately, material costs, because not just of our slight increase in our Durango market, because of regional, national, and international demand for products, be it drywall, steel, lumber, would be a substantial demand on that product, which supply and demand increase the price for those contractors and developers and builders to provide that great cost incentive in that arena. The construction and development keeping pace with demand. A lot of these things are going to be carryovers, a bit of a hangover for 2014. But if you look back at last year and you had a crystal ball, you would say, we need more new product. And this is not the lender's fault, the banker's fault, but certainly there's a transition for the lenders and bankers to realize that we're going to get behind the curve in the third and fourth quarter of 2013, in the first and second and third quarters of 2014. And so that is what we've experienced. And we believe that unfortunately happened. We're behind on supply. Loan criteria. Well, the government takes great care of us. Everybody agrees with that. Just checking to see if you're awake, because I get to go first this time. Usually I can say that, doesn't matter because everybody's gone, but you're still here. But loan criteria, additional rules and criteria, this is a challenge, not just for self-employed. We put it up, if you're self-employed, the criteria for proving income for multiple years will be very demanding to secure a home mortgage, for example. And for everybody else, there's more requirements documentation of income, documentation of expenses, documentation of many things that are become a challenge. Well, we have not found that to be a substantial hurdle yet, but it is definitely more work for your fine lenders and bankers in the room and for your brokers that are here tonight. So, positive influence of 2013, it happened. I mean, yes, rates went up. But many of you in this room, because I watched everybody walk in here, you'd have to be too old to borrow money to get rates at this age in the old days, okay? It is a very attractive mortgage rate interest environment. The investor diversification, what do we mean by that? Well, last year and in this first two and a half months of this quarter, first quarter, you have situations where if you go to any of your fine bankers here tonight and say, great, let me put some money in a CD, the rate is fairly marginal. If you put it in bonds, it's marginal. And if you put it in the stock market, it's good today, maybe not so good tomorrow. And this has really created some anxiety with people that have available money to invest. And we have seen last year, this to prove true, where we have more and more investors saying, let's find some investment opportunities. Multifamily is a great example. Housing, vacancy factors, if you watch the Durango Herald, every quarter we'll do a report, but we really need more apartments and housing for Durango residents and La Plata County residents. And then second, and vacation home strength. Well, is very weak. This recession really beat up our second home, vacation home buyers. It's a discretionary choice, so they chose not to purchase a second home or a vacation home. In fact, in probably 2010, the numbers of second home and vacation home buyers shrunk substantially by 200 or 300%. Fort Lewis College growth last year, we did predict that and felt that was a great compliment. Just to let you know, if our college here grows at 100 students, 100 freshmen, sounds pretty minimal. 3,800 students, 100 more freshmen. What that does is it pushes 100 junior and seniors into the market by choice primarily, but also our dorms up here are 95% full, to go into the housing market in Durango. So what is that, 10 people to her house? No, I'm sorry. Let's say 3. Let's say 3 or 4. That's 25 to 35 houses, primarily in the rental side, that are occupied by college students, not by working families, not by individuals, not by couples. That is a substantial demand on the housing market. We also feel the air transportation last year was a key growth factor. In fact, Kip Taylor, who's our great new director of our airport, shared with me and many of you that were at a La Plata Forum recently that there were 2 airports that grew in employments in 2013. 2. Durango, La Plata, and DIA. There's a lot of airports in Colorado, and only 2 grew in employments. Now, I could share a personal story from 2 nights ago, and a friend of mine over here to my left could share that, where we have the United stories. No one has those, right? But Kip has shared with me that they are pushing very hard to improve that. But when you think of 200,000 people flying through this airport, it is a great economic factor and a growth factor that allows us to continue to attract business and attract visitors and attract people that are interested in living here as a part-time, full-time, or a vacation home basis. Feeder markets, it's very easy because this is all hindsight, but we did predict these markets would improve. And I will just share with you when I say California improving, there's some markets in California that were super strong. But when we talk about the whole state, it's different. I don't know if Bakersfield improved, but certainly Orange County did, San Diego, the Los Angeles area. And those areas are predominantly strong feeders to our market here. Texas, very, very strong. I put it at the bottom only because it's alphabetical. Does anybody want to check that? Good. All right, 2014, let's just switch here. Just let you know, our team said 12 minutes. Because I get to go first, I thought I could do what Bob's usually doing, but I still only get 12 minutes. But what we want to share with you is 2014. The inventory that's coming online is going to be a positive. We don't believe it's going to be enough. And this is in no order, but we'll share with you that Edgemont and Edgemont Highlands has some inventory. It has, as you'll see in the program here, additional vacant lots to have builders or individuals create additional inventory, but it's not enough. And Twin Buttes has been in the process of becoming a community for years. Lots of infrastructure has been added in the last several months. There's many reservations, as you'll hear later in the program, but it's still not enough. And we won't see rooftops starting until probably third, fourth quarter there. Three Springs, bright light, at the same time, in the current phases that have infrastructure in place, may not be enough to supply the demand for the growth that you've seen there, 30 plus, 40, close to 40 units a year. If we saw that this year, for example, the existing improved lots and townhome sites may be short of the demand. So the good news is we have that inventory. The bad news is we hope and we expect to see that inventory grow in those developments. Other positive influences, well, what we're going to expect to see because of what we just covered is that we'll see the area around Durango to see substantial increases in sales. That's the rural areas. I've identified some, Edgemont is not in the city of Durango, but Three Springs is, and Twin Buttes is, but this is Rafter J, Durango West, Shenandoah, up the Florida Road and other rural areas. We'll see strong demand in regards to proximity to work and schools, and we'll see that demand decrease inventory again. In town, Bayfield actually has seen substantial absorption, and we're in a position where we expect to see quite a few new products brought online. And there's enough inventory probably to see this through for 2014, maybe not 2014 and 15. Forest Lakes, Bob will share with you, and has in the past years if you've been here, second largest community in La Plata County by population. It's not incorporated, but as population density goes, that's the case. We've seen inventory be very low in the heat of the market in 05 and 06, but we've also seen inventories very high in 9, 10, and 11, for example. Those inventories have been absorbed substantially. We expect to see additional standing inventory absorbed through 2014, and probably some additional inventory brought online in the third and fourth quarter. So let's talk about North County. When we talk about North County, this is a little different than when Bob talks about it because he pulls it very specifically by county data. We're going to talk about it from Tameron or Rockwood and North. Well, Tameron and Glacier Club have seen some very good absorption this year. In fact, Tameron, if you flash back 3 years ago, had 90 units on the market, probably below 40 units now. I would ask Julie Houston, I should have asked her before this moment. It's gone down probably in the last day. At the same time, we're going to see, if you looked at Glacier Club, more difficult to try to predict what's going to happen there, but because of the values, it's $500,000–600,000 to $2 million product, but they do not have much inventory, and the opportunity to add inventory to that select market, the very select market, we see as an opportunity in 2014. Then we go up to the DMR area, Durango Mountain Resort. There's not been much new inventory added at all. DMR has added at a very slow pace some product on the side, but nothing on the west side has been developed for years, and we believe that there's a great opportunity for some additional inventory because of that second home and vacation homeowner looking for a resort opportunity for year-round vacationing. So we're going to get to some predictions. Like we showed you the 2013, what do we feel? Well, 17% increase. That's less than the 28% increase. We at the Wells Group as brokers feel that this is very dynamic. It's a strong market indication, but it also is a bit inventory challenged. That's why we feel that we're going to see a lower level of increase from 12 to 13 and 13 to 14. It's 28%. Appreciation, 8%. Well, countywide we're at 3.5% last year, so this is doubling that, right? Why? Inventory. Supply and demand, pretty simple economics. If the supply isn't there, the demand is, there's more pressure on the pricing, we'll see prices increase. We'll see more high-end home sale too, which adds to that formula, as Bob will talk about later. Nationwide, whoops, sorry about that. Nationwide, Bank of America this year is predicted 6.5%. They predicted 9%, and they hit 9% last year. This is probably because some of those markets that had huge changes, be it those metro areas of South Florida or Southern Arizona, Southern California, for example, saw big increases last year. Probably not as big increases this year. Yet, this is still a very healthy growth for the economy. We still feel that we'll see strong growth in general employment and particularly in the building trades. And that demand will look to our builders in the audience to say, where are they going to come from? I'm not sure, but we need them. So Bob will share the slide later. I'm not going to ask you to respond to this now, but unfortunately, in our 14 years, we've gone through this whole process since we've done this forecast. In our 28 years of the Wells Group, we've gone through this twice, Jim. So that gives you an idea. This happens. This happens. And in your industry and our industries, we just want to respect this. But certainly you have to wonder where you're at in this cycle and proceed to the next chapter, which is going to be very exciting. So just again, contact our brokers. Let us. You can get the forecast at the Wells Group. Just wellsgroup.com, whatever it is, Jim. What is it? wellsgroupdurango.com. Sorry. And just ask your brokers for the password. Very simple password this year. And Bob, hand it off to you.
So the first thing I want to do, can you hear me? Am I on? First thing I want to do is have a big round of applause. Thanks for the Wells Group for putting us on every year. I think it's a pretty cool thing, pretty neat thing, pretty informative event for everyone. And I hope you enjoy what you get to see. Hope you learn something. And if you didn't learn something, come up to me and just lie and say you did. So, I'm going to start out with the basics of what I see. And I see it a little differently than the realtors do sometimes. The realtors are on the front lines. They're out there and they see exactly what's going on with the buyers and the sellers. They see it a lot more clearly than I do many times. I look at the data, and I look at the data sometimes in the rearview mirror. So I'm not looking at what's going on right now. I try to keep pace with that, but that's a little bit of a challenge. But I'm going to tell you that the biggest issue right now in the local market is inventory. That inventory of improved residential units available for sale and for rent is near record low levels. It's very small, particularly at certain price points, particularly below, say, $400,000 and in town. So next year, I expect some increase in transaction activity, but I think that year-over-year improvement, as they said, is going to be less in 2014 compared to that improvement we saw in 2012, in 2013 compared to 2012. I think those numbers will be smaller. Interest rates spiked with that first sign when the Fed began their taper asset purchases, but rates remain 1% higher now than they were last year, so that could have an impact. Interest rates could go up, and that could continue to slow things down a bit. I think you're going to see a huge change in the construction activity. Given that low inventory of supply, I think the construction market, the contractors are finally going to start to see hay. They're going to make hay here in this next year. Things are going to start to get a lot better for those folks. They've had 5 or 6 rough years. And then I don't really know what's going to happen, how this qualified mortgage is going to impact the market. We're going to go from no doc to every doc. We're going to make it give you everything. So take it easy on these lenders. It's not their fault. The government's making them do it. A lot of it makes sense. A lot of it makes common sense. Some of it may not. Who knows? We don't know what kind of impacts that'll have on the market just yet. The fundamentals drive the housing market. Population growth, household growth, and job growth. Those are the most important factors in the housing market. We went through the period between 2002 and 2008 of free money. We're back to the fundamentals. You got to have population growth, you got to have household growth, and you got to have job growth. Low mortgage interest rates sure do help. This is the state. It's population growth over here for the state of Colorado. This is the county, Plata County. So for the last 12 years, Plata County has averaged about 1.5%, a little bit better than 1.5% per year growth, population growth. That's pretty darn good, actually. The state's done that or a little bit better. State demographer predicts this kind of growth right here, about 1.5 to 1.75 for the next 2 or 3 years. Oddly, for us, they predict a really strong growth rate of about 3%. I doubt it. I don't think that's going to happen. My guesses are about 1.5 to 2%. I think it'll be stronger. In fact, we asked Dr. Rich Wobekind at the Wells Fargo presentation in January. We said, Rich, demographer predicts a 3% growth rate. He said, well, that seems a little optimistic, but I wouldn't be surprised by 2.5% given the growth we're seeing on the front range. So I was surprised that he even said that. That seems really strong, but with strong population growth, you're driving demand for housing. So here, I've got my guesstimates for 1.5 to 2%. That's what kind of population. Those are the absolute numbers of folks we might see move in for the next 2 or 3 years. But you take that number and divide it by 2.5 or 2 people per household, and you get household growth. So those are basically the number of residential units you need on an annual basis to satisfy that population growth. We're not doing it. We're not doing anywhere near that right now. That's why we have a low inventory number, and that's why the rental market is so powerfully strong. This is another reason. The labor market's been pretty strong for the last year. This is growth, year-over-year growth, change in employment, percent change in employment. So this number here is on this y-axis. So you see here in sometime around April, May, June of last year, we were doing 6 to 8, 9% employment growth in La Plata County. That's pretty strong. At the same time, our unemployment rate was coming down. Fell to about 4.7% in December of 2013, compared to the state number of 6.2%, or the U.S. number is 6.7%. Labor market in Plata County is pretty strong. Tough to find help. Tough to find people to work for you. And then, as we know, those mortgage rates have fallen. This is back in 2000, January 2000, about maybe June 2000, when that rate was 8.5%. And it fell all the way until about December or maybe July of last year to 3.3%. It's about 1%, maybe a little bit more than that right now. It's up, but it's still remarkably low compared to where it's been. I can remember when I got my first mortgage back in 1981, my mortgage interest rate on a 30-year mortgage was 11.5%. Tourism is still a major driver locally. It's one of the biggest drivers, most of you know that. The train, DMR and Purgatory, and Mesa Verde. Mesa Verde is actually the largest, to many surprise, down here in the green. And what I try to show is that between 1978 and right now, that total number doesn't vary a whole lot. It's pretty stable. between 800,000 and 1.2 million. They come every year. This past year was down quite a bit because Mesa Verde was down 78% in October because of the government shutdown. Mesa Verde was typically in October, they do about 40,000 visitors, and I think this year the number said they did about 8,000 in October. So they were down quite a bit. Oil and gas. This is a big local economic driver, has been for a long time. According to the COGC, there were only 3 wells drilled in 2012 and 7 wells in 2013. That's the fewest number of wells drilled on an annual basis in the past 24 years. So activity on in the oil patch has slowed down quite a bit here locally. Price of natural gas has risen recently. According to Christy Zeller, 6,000 La Plata County residents receive royalty payments from their mineral interests in La Plata County. 6,000 is greater than 10% of the total population that receive royalty payments from their mineral interests. That's a big deal. If that number goes up 50 cents or a buck an MCF, they start to make more money. They start to feel better, they spend more money. That's a good thing. La Plata County depends on property tax. They depend on property tax that they get from the sales. They tax oil and gas sales. And so back in 2004, down in 2007, that number was 66% of the total property tax was oil and gas. It was taxes on the oil and gas industry. It's down to 37% of the total. That has an impact on every aspect of the county services. Every aspect of county services is impacted by falling property tax revenue since 2010. I think the chief financial officer told me that was about 50%. 50% of the total budget, something like that. That's right. City of Durango has been doing pretty well. Retail sales tax collections are the highest level they've been in 6 years. Lodgers tax collections are the highest level that we've seen since 2008. So the visitors are coming and they're buying some stuff and we're buying some stuff. So retail sales collections are very good for the city. So the city's pretty healthy right now. They're predicting something about 6% going forward in 2014. The airport, as John says, done very well. The airport was running about 100,000 employments back in 2005, and it's almost up to 200,000 in 2013. That's huge growth. It's one of 2, I believe the manager at the La Plata County Airport said it's one of 2 airports in the whole state of Colorado that saw growth in 2013 compared to 2012. So maybe it is time for a new terminal. Maybe it is time to build that.
So my name is Roger Zonaretis. I'm the director of the La Plata Economic Development Alliance. We've been around for about 3 years. Our main goal is to help businesses grow or move here to Durango and La Plata County. So we'll do that either by assisting them when they have questions, or we create programs for them to help make it easier to get employees here, for example, or we'll try to work on larger issues that affect businesses, whether it's space, whether it's air service or internet service for them. Definitely seeing an uptick in businesses that are looking to move here. We had, in 2011, our first year, we had 1 business looking to relocate that contacted us. 2012, about 6 businesses, and last year there was over a dozen. And the trends that we're really seeing right now is in construction, technology and creative individuals or small businesses looking to move here, and tourism as well. So businesses that are already here, space comes up quite a lot. We've got, thanks to Mercury's expansion, we're going to have significant new office space, quality office space coming online. So that's not the real issue. We're going to have great office space available. It's the issue for construction companies, gas service companies, able to find multi-acre sites where they can do storage, warehousing, manufacturing, things like that. We just have no supply of it all in this county, and that's the biggest challenge for our local businesses. For businesses that are looking to move here, the challenges that come up are related to employees, getting their employees out here, finding adequate housing for them, and just learning how to deal with, just learning the local market. you'll have two categories of people who are looking. You might be bringing in a mid-level person or an executive. Those are the two levels. The executives and the folks that are coming in at the senior level, we don't hear much complaint about any problem finding real estate, rentals, or otherwise. It's those mid-levels that are truly challenged, and what they're going to be looking for is either some transitional unit, 1 or 2 month or 3 month, while they sell their home in another market, or to be a 6 to 12 month rental. Then finally probably buying at that point. But usually they'll be looking at a rental at first. You know, a lot of what we hear about the rental market is anecdotal from businesses or new employees that have moved here. But I'd say there's a rising level of frustration or concern. I've heard of some cases where employees have just opted not to move here because they can't find units. Or situations where employees have lived for weeks in a hotel where they look for a rental unit that's in their price range. To assume for a moment that we have a sufficient coverage of rental units right now. We don't. But just to keep up with population growth, we're probably going to need another 100 to 120 units a year for the next several years of additional rental units in this market. One thing too that jumps out at me here working with the Alliance is that oftentimes we think about Durango and the need to have housing in Durango, but a lot of people who are moving here are moving from larger cities where a half hour or 1 hour commute is the norm. So living 20 minutes away in Bayfield or Ignacio is a very viable potential for them. So we can't forget those markets. So those markets we need to promote and tout as being a 15 or 20 minute drive from a large number of employers in this community. And that would be part of the solution for our housing and our rental needs, is to remember that we are a county with a diverse range of housing options.
I only pressed it once, Mark. I'll press it one more time. So, current supply constraints. We've talked about that a little bit already. Improved residential housing units available for sale and for rent are near multi-decade lows. The supply of unimproved vacant land remains high, and by unimproved vacant land, I mean vacant land with lots that are ready for vertical construction. Lots with water, sewer, roads, sidewalk, curb, all that. There's a lot of that that's approved out there, but it's not ready, shovel ready. And what you got to realize in the real estate market is it doesn't provide instantly available sellers and or buyers. Sometimes that takes a while. This is the supply of all property types in La Plata County. It's total active listings of everything. Land, residential houses, commercial property, townhomes, all of it. These bottoms, these cyclical bottoms, all represent January of that year. So right around now, our supply is always at the lowest time it's going to be for the whole year. And then it goes up every year. Same thing happens, it goes up. And it goes up about 30% from where we are right now. So as we go forward in this presentation, just remember, that supply, I'm measuring it right now, it'll go up about 30%. Land sale transactions start with land. Underneath all is the land. So vacant lots under 1 acre, those sales have really picked up in the last 2 years. Sales of 35 acres or more picked up a little bit in the last year over 2011 and 12. Land for farm and ranch, it's actually picked up a little bit in 2013 as well. We're not quite where we were back here in 2006, but these lot sales sure are, and these 35-acre tracts are starting to pick up and starting to get closer to where we were. If you look at the vacant land sale price distribution, 83% of those land sales happen below $250,000. So 83% of the sales happen right here and less. And if you look at this graph, you see this is 2012 land sales in that price bracket. The yellow is 2013 land sales in that price bracket. And then the green is the supply as of January 22nd, 2014. So remember, that green could go up by about 30%. So there's still an abundance of land out there, still available. When you look at the monthly supply, we can see back in June 2006, right around here is where that Great Recession started, December 2007. And the supply skyrocketed. Why did it skyrocket? Because sales started to fall out, more property came on the market, and the month's supply went way up. But ever since the end of that recession, June 2009, the month's supply of land less than 1 acre continues to fall. It's gone way down. 35-acre tracts has really hovered around this 100-month average. So there's still quite a bit of that vacant, unimproved land available for sale. Days on market's another indicator of what's going on with the supply. Somewhere here we've got days on market for land was high back in 2012, but it really fell in 2013. So those lots really started to sell. You look at the land though of 35 acres, sitting out there on the market for quite a while. With land, farm, and ranch, it's been pretty stable over the last couple of years. Single-family residential property, 90% of the sales in La Plata County happen less than $600,000. 90%. 7% happen between $600,000 and $1 million, and 3% happen greater than $1 million. So the lion's share of the activity in La Plata County is right there, less than $600,000. And that's been the case for quite a while. So if you look at the number of homes sold in La Plata County right here, between $200,000 and $400,000, that's what's sold in 2013. What I want to show you is this is the supply as of December 2013. Now remember I said that number might go up 30%. It's still way undersupplied. There's not enough product at that price point. It gets a little bit better here, but even if this goes up by 30%, it's not enough. Remember, the population growth is strong, but we're cutting out the supply. So the demand side is strong, supply side is low. Look at the month supply of homes for sale in those price brackets. Well, we know there's not a whole lot between 100 and 200,000, but it's only 5.6 months of supply right now. Last year it was 9. Between 200 and 400, it's only 5 months. Last year it was 8 months, and so forth. It gets a little bit better here as that price goes up. But down at the low end, that supply is very low. In town, the month supply of residential units, just like everything else, skyrocketed. This is condos in the red, condos and townhomes, and then this is single-family units in the blue. Skyrocketed through the Great Recession, and then started to fall. As we weren't building any units, and we were starting to suck them up and sell those units that were for sale, supply fell. 6 months supply is considered market equilibrium. Right now in town, overall, for everything, all price points, we're somewhere around 3.3, 3.2 months supply. That's not a lot. This is a little bit more complicated view of what I was just showing you. This blue is 2012 sales for that price bracket in the city of Durango. This red is 2013 sales for that price bracket in the city of Durango. That green is what was listed a year ago. That purple is what's listed right now for sale. That blue is the number of months supply we have in town for those price brackets. So below 550,000, that number is 2 months or less. The reason the other chart shows 3.2 is because you've got price brackets that are north of $600,000. Days on market in town. Look at how low this starts to get. In town, that single-family residential days on market is only 150 days. Look at the residential acreage. That's for homes, I believe, that are just outside of town. That's also very low. Got lower in 2013. What is that? That's about 4 months. That's not very long. Look at the residential acreage here. It's not very much. Anything under 180 days is an undersupply. Real estate transactions above the $1 million. A lot of folks like to talk about that. That also peaked back in 2006. This is the total. This is all sales. So this blue includes commercial, everything. This green is single-family residential in the whole county. What you see is it went flat from about 2008 through 2012, maybe a little dip in 2012, but it's actually gone up in 2013. Again, vacant land is still a little bit flat. Foreclosures, short sales, stressed property. I almost hesitate to put this up there. It's almost a non-issue in the local market at this point. Yeah, there's still some foreclosures, there's still some distress out there, but it's nowhere near what it was. Foreclosures peaked out, those that were filed peaked out back in 2010, up around 325, 330. Now it's down to about 140, 135. It's way down. It's far less important in this market. This is the real critical number, is how much of it actually went to sale. And right now we're down around 60. We're down 42% in 2013 from where we were in 2012. So those numbers, these foreclosure sales are way down. So the distress in the market's been sucked out. Those properties have been sold. It's far less of an impact. If you're looking for a distressed property, it's much, much harder to find. Like I said, population growth is strong. Household growth is strong. Job growth is strong. Demand is up. So if we look at this pink right here, that's 2012. If we look at the blue, it's 2013. Look at the pink compared to the blue. Forget about the red for the time being. For the last, all the way through October, for most of last year, there were some very powerful moves up, very strong. It was 30, 40, even sometimes 50% increase year over year in transactions. It was very strong. But here in September 2013, we saw a little dip. Maybe that was because of those interest rate rises back in June, July. Maybe it's because of inventory. But we saw it bump back up in October. And then we saw another dip in November of last year. Maybe it's because of inventory. Maybe it's because of interest rates. What we see here for the first 2 months of this year, we see year-over-year decreases of about 10%. It's actually 10 to 12% for the first 2 months. Slowing down a little bit. Maybe it's because of interest rates. Maybe it's because of inventory. I happen to think that low inventory is having a big impact on that. Think about it. You cut out what people can afford to buy, less than $400,000. If you take that inventory and cut it in half, you're going to see fewer sales. This shows you the cyclical nature of our market. These are transactions on a monthly basis. I've been tracking it ever since 1986. These shaded areas are the recessions. So it went up, peaked out in 92, 93, 94, fell, went flat through 2000, 2002. And then we had that rocket ship driven by the subprime mortgage market. Funny money, we were giving money away. We drove a strong market for a long time, and then it started to fall. I was watching these numbers here and taking a lot of heat for saying this was falling because I was watching these numbers and it was falling. It was before the Great Recession. And then the recession came along. We sort of bottomed out. April 10, right before the recession ended. And then we've been on a pretty steady climb ever since then. Things have been going back up. Things are looking better. Start out in 2009 with the bottom, the recent dive from 2005. And we sold, 2,700 properties sold back here in 2005 to less than 1,000 in 2009. And now we're back up north of 1,500. So we're up 50% from where we were at the bottom. Dollar volume's been really strong here in 2013. Particularly, you see this spike in December. Big spike in December is because we had several big, large commercial properties sell that were large dollars, and they make up the bulk of that. Dollar volume, again, it peaked in 2006, fell through 2009, and it's also on a steady rise. The market's been going up for the last 5 years. Things are looking better. If we look at the transactions by property type, this blue line here is condos and townhomes combined. This is for the entire county. This is single-family residential property, and this is vacant land. So you can see it all fell through 2009, and it's come back up. But what's come back up really strong is that improved single-family residential property. A lot of those have sold. This vacant land has been pretty stable for the last 2 years. Commercial, down here in the purple, believe it or not, is going to show you the biggest bump in the last year. Commercial, even though it's a small percentage of the total, it really had a strong increase in 2018 compared to 2012. Vacant land's been very flat. All the rest of these are 25 to 30%. Pretty strong moves in the upward direction. I'd be surprised if we saw that same strength and uptick going forward in 2014. I think what will happen is some homeowners or sellers are waiting for those prices to rise. As those prices rise, I think existing home inventories for sale are eventually going to go up. You're going to start to see people come to the table and want to sell, perhaps get a better house, move up, whatever they do. Median home price in the city of Durango for a single-family home peaked back in 2008 and fell pretty substantially from about, I don't know what that is, 405,000, down to about 350 in 2010, and then even lower, 340 in 2012. We saw a nice, healthy increase between 340 and almost 365 between 2012 and 2013. We also saw a healthy increase in the number of units sold. I put this up there because this is the Case-Shiller Index. This is the national index. My numbers here are median sale price, middle of the data set. The data set that sells whatever it is between 200 and a million, whatever that middle is in that data set. Case-Shiller is paired sales, so if one house sells for $100,000 in 2013 and then sells for $105,000 in 2014, that's a paired sale and it went up by 5%. So they're fundamentally different. The markets on a national basis seem to be paying a lot closer to this Case-Shiller Index than they are median numbers these days. That tends to be what they're watching. What I wanted to show you was that curve is the same. That curve is very similar. Condominiums prices were flat 2012, 2013, but there were more sold. Townhomes prices were up 2013 compared to 2012, still well below where we were back in 2006 through 2010. Number of townhomes sold is up. I only pushed it once, Mark. Want me to push it again, Mark? Yeah. I pushed it once more.
My name is Max Hutchison. I'm a real estate broker with the Wells Group. I've been working at Three Springs now for 3 years, selling primarily residential homes and townhomes.
My name is Tiari Flora, and I work with Wells Group of Durango. And my business partner Alex and I work with Nicole Perino, and we are part of Team Twin Buttes.
My name is Justin Osborne. I'm a real estate broker with the Wells Group Real Estate Brokerage. Right now, we are sitting in the lovely Community Lodge up in Edgemont Highlands. We're about 5 miles from Durango city limits.
Twin Buttes is a new development that's come to Durango in the last few years. We have been annexed into the city of Durango, so living in Twin Buttes is like living out in the wild, wild west, but yet you're part of the city and you get to access all those wonderful city services.
So Three Springs is a traditional neighborhood. So it was developed based on a lot of the older neighborhoods, and even downtown Durango would be a good example, where you have the homes that are alley loaded and they're a little bit closer together with large front porches to encourage neighbors to visit with each other and sort of have a little bit more of a community feel to it.
Last year, in 2013, we saw a phenomenal upward swing with the real estate values up here. We had 21 lots that were sold, which was up about 28% from 2012. And the median price went up from $111,000 in 2012 to $142,000 in 2013. So prices are clearly on the rise. But the good news is right now we have 16 lots currently on the market, and all but one of those are priced under $150,000.
You might remember at the last forecast, for those of you who were here, that Twin Buttes opened up for reservations. And we're really happy to tell you that about 60% of what we currently have available is reserved. Since the last forecast, we have been very busy. Twin Buttes has installed 2 miles of water and sewer lines, about a mile of stormwater systems, and we have connected our water and sewer systems to the city of Durango. Also, it's really exciting for those of you in this community who might know is that Animas High School has joined Twin Buttes and is part of Twin Buttes and are a first member of our community, and we're very excited to have them on board.
Right now, we just finished in 2013. We sold 31 newly built homes and townhomes. For 2014, we're expecting to sell somewhere between 40 and 50 new homes and townhomes. Currently, we've got 50 available lots, with another 60 lots coming online in 2014. So roughly 110 total lots that we're going to be able to build on within the next 12 months.
With only 16 lots left, 21 lots sold last year in 2013, we only have less than a 1-year supply right now of phase 4 of lots in Edgemont Highlands. The good news is we have been working with the La Plata County Planning Department. We have gotten the green light for new phases to come on available for purchase here in the near future. Near future being probably 18 to 24 months out. So keep an eye out for that. We will have some inventory coming. No guarantee yet on what those lot sizes or prices are going to be, but they will be future phases here in the development.
There are 655 units planned here at Twin Buttes. Includes single family, custom homes, semi-custom, townhomes, a good mix. We also have about 200,000 square feet of commercial that's going to be available for people to take a look at and come and invest in at Twin Buttes. Another thing that we've been working on is preparing 4 different built products to unveil this summer to the community. These products are going to range in size, probably 1,000 to 2,500 square feet, 1 to 2 bedroom, up to 4 bedroom, depending on what people's needs are. We're really excited that Twin Buttes is going to be able to offer this to the community of Durango.
80% of the homes that we sell at Three Springs are under $350,000. The bulk of those, we have 6 floor plans that are under $350,000. So we feel that moving into 2014, we're going to see that same trend continue, that the bulk of the homes that we'll be selling at Three Springs will be under $350,000. Square footage on those homes ranges roughly 1,700 square feet down to 1,000 square feet. And townhomes, we'll have 14 townhomes that'll come online this year. Price point on those is $264,900, and then square footages on those are 1,300 square feet.
There are a lot of homes being built right now in Edgemont Highlands. If you drive around phase 4, you'll see new construction going up. It's a great sign for the recovery that's happening right now in the Durango real estate market.
So let's look at the rural county. Bayfield, we'll start with Bayfield and Forest Lakes. Rural county is a little different picture from in town. A price actually fell, that median price actually fell from about $340 down to $330 between 2012 and 2013. While we also saw an increase in the number of transactions out there in the county somewhere around 350 up to about 475. Durango West, Wells Group has asked me to take a look at specific subdivisions. And Durango West, between 2000 and 2007, went up 78%, typical 3-bedroom, 2-bath home. This isn't necessarily a median price, but the typical 3-bedroom, 2-bath home went up in price 78% between 2000 and 2007. It went down 19% between 2007 and 2011. Little or no change between 2011 and 2012, right in here. But then it spiked back up, started to go back up here in 2012 to 2013 with an 8% increase. Go over to the town of Bayfield, things have been getting a whole bunch stronger over there. The number of single-family sale transactions in the town of Bayfield, which is blue, has been increasing pretty steadily since 2010. It's gone up 2011, gone up 2012, gone up 2013. Forest Lakes, the number of transactions has been pretty steady. If you look at Forest Lakes, it's one of those areas that probably was influenced the strongest of any area in the Plata County by distressed sales. But if you look at the total of those markets, the number of sales is going up. The median home price for the town of Bayfield and Forest Lakes went up quite a bit. This should be 2012, 2013. That's a typo there. But between 2012 and 2013, the town of Bayfield numbers went up about 16, almost 17%. Forest Lakes went up quite a bit more, went up almost 22%, 21%, and that's because that distress in that market came out. And now you're starting to see the normal market forces at work, and you're starting to see prices rise when it gets out of that distressed situation. Volume is up. Volume is up in Bayfield, volume is up in Forest Lakes, and the total volume in those areas is up. Still quite a bit below where we were in 2005, 6, and 7, so we have quite a ways to go. Look at a typical 3-bedroom, 2-bath home in Forest Lakes. This is a 1,500, 1,800 square foot home. That price went up 80% between 2000 and 2007. It fell 24% between 2007 and 2012. And then it started to rise again here, 2.5% between 2012 and 2013. Again, that's not a median price. That's just a typical 3-bedroom, 1,500 to 1,800 square foot home. So that's a lot different than a median price. North County Resort Market, Purgatory, DMR, and the Glacier Club. Activity up at Purgatory has been a little slower. It's been flat for the last year. Vacant land sales activity is down a little bit. Condos and townhome sales are up a little bit. Single-family residential homes are up a little bit. But in total, it's kind of flat for the past 2 years. Remember, I'm just looking at 5089, which is an assessor's parcel number, which essentially comes as far south as Needles Store and then goes north to the county line. That's what I include in those numbers. So it's quite a ways below where it was in 2005, 2006, 7, but it has started, looks like it's starting to stabilize right now. Sale dollar volume continues to fall. I'll bet with the stabilization in those prices, you may start to see that volume start to rise. Tamarron's been a little stronger. They've seen strong uptick in their condominium sales, especially if you look at it compared to back in 2009, 10, 11, 12, 13. All of those years are up. Their townhome sales are also up quite a bit, especially between 2012 and 2013. Their vacant land sales are a little flat, but overall, those number of transactions up at the Glacier Club have been pretty strong, showing an uptick. Sale dollar volume is sort of the same picture. Had a down year in 2012, but their dollar volume in 2013 is up quite a bit compared to where it was in 2012. Mortgage market credit conditions are extremely important to the housing market. As everyone knows, those mortgage interest rates remain very low. The median home price, believe it or not, is very affordable still. It's below record high, but it's still affordable. There's plenty of mortgage credit available locally. These local lenders are making loans and willing to make loans. Not sure what this Dodd-Frank reform, ability to repay rule, and all this qualified mortgage rules, what they're really going to do. They're complex. The devil is in the details. How is this all going to work out? I don't know how that's going to impact. Nationally, mortgage credit availability is up from about an index of 100 in March of 2012 to almost 114 in February 2014. That means mortgage credit is more available in 2014 than it was in 2012. If you look back in 2006 or 7, with that number, that index number was up around 800. That probably means it was way too easy to get money.
My name is Mike Burns. I work for Alpine Bank. I've worked for the bank for 17 years. I've been in Durango for about 9 years. Boy, we've really lived through an interesting market. 2007 to 2011, we went through a very difficult time. Through that, however, I do feel like there was some pent-up demand from people that really did want to do something, whether it was start a business, or it was buy their first home, buy a vacation home. And I think we were the beneficiary of that in 2012 and 2013. So I've gotten a handful of questions the last couple of months regarding the new regulations that took effect early January as it relates to making sure that our borrowers can in fact qualify for the mortgages that they've applied for. What we're seeing those regulations essentially precluding is balloon payments, meaning that the loan comes due in say 3 years or 5 years. Because of the new regulations, that's going to impact our ability to provide those. And I think what you'll see going forward is banks will most likely provide fully amortized loans, which really likely are better for the borrower. The other thing that is going to be impacted is this concept of adjustable rate mortgages. And again, I think you're going to see banks looking at providing more like 5-year fixed rate loans in many cases. And that's going to help us comply with some of these new ability to repay guidelines that were rolled out in early 2014. In addition, banks are now required to provide additional documentation as it relates to the income the borrowers have in which to qualify for the loans they've applied for. And you're going to get requests from your mortgage lender, your commercial banker, for more things than you probably historically provided, additional documentation, and that's really the reoccurring theme. Please just be patient when we ask for additional documentation, and maybe a little bit more, and maybe even a little bit more after that. What I would highly recommend is sooner than later, make an appointment to talk to a mortgage lender. The concept of getting pre-qualified prior to making an offer is extremely valuable.
Created my own affordability index for La Plata County and the city of Durango. And an index of 1 means that a family with a median income has exactly enough income to qualify for a mortgage on a median priced home. An index above 1 signifies a family earning that median income has more than enough, so it's more affordable if it's above 1, assuming a 20% down payment and prevailing mortgage interest rates. So here between 2000 and 2004, the city was less affordable, the county was affordable. People were able to make it work. But during that subprime lending peak, when we were giving money away, everything became far less affordable based on income, which of course you didn't have to prove if you had any, so it didn't matter. And then as that subprime lending peak went away, prices became more affordable, so that in 2012, we were up here. It's fallen a little bit in the 2013, but that index still remains above 1. So that median price in La Plata County and in the city of Durango still remains fairly affordable based on 20% down payment and prevailing mortgage interest rates for the year. And I show this on a national basis because I wanted to show you the curve is the same. Goes up and falls. Nationally, it's still very affordable. The number of deeds of trust were very high back here. It makes sense. Activity was very strong. Interest rates were coming down, so the refi. Then there was a refi boom here in the 2012, 2013 during the Fed's QE period where they were buying assets. And it's fallen back down primarily because the refi boom is gone. Refi boom on the residential side has really subsided. But they're still making plenty of loans. There's still plenty of money available here in La Plata County for loans. You look at that, you start to see here that in September of 2013, the number of deeds of trust issued really started to fall. You saw those interest rates jump about 1% in June, and then we saw that refi boom taper off here in these months, so you don't see the same level of deeds of trust transaction activity that you saw a year ago in 2012. In La Plata County, the average, the percentage of cash sales over the past 10 years, it's been about 23%. And right now we're just below that. We're at about 24%. That number's been coming down since a peak of 2011, but it's gone up since this down here in 2004, where it was easier to get money. Gone up, cash purchases, less cash purchases, an average about 23%. We're pretty close to that number right now. Where do our buyers come from? Well, back here in 1995, after Loma Prieta earthquake and the Oakland fires, a large percentage of folks moved out of California, and a large percentage of them came here. So they made up the lion's share of our out-of-town, out-of-state buyers that were coming in from out of area. 2005, that started to shift, or 2000, excuse me, that started to shift to Arizona and Texas. 2005, it's a blend of everybody, but most recently, Texas is going up. I like to say we've moved from the left to the right. And Texas is booming. Texas economy is booming. It's very strong. Oil and gas industry is booming down in Texas. They're going to keep coming. They like this area. Back when I first came to Durango in the 80s, the number of folks that came from Texas was easily the strongest sort of immigrant coming into this area. That tapered quite a bit when the price of oil went from 40 bucks to 10. But now that that oil and gas industry is so strong down there and driving other economies in Texas, they're going to keep coming. Can I go again? I got it. Look at the counties adjacent to us. Montezuma County to our west, Archuleta County to our east, and San Miguel County off to the north. I don't have San Juan County. They're not experiencing the same kind of boom here that we've seen recently, the same kind of increase in activity. You look at Archuleta County, it's been pretty flat. Montezuma County saw an uptick in 2012, but between 2012 and 2013, it was pretty flat. And then between 2012 and 2013, San Miguel County, which is where Telluride is, it was actually down a bit. They're all off from that same peak that we saw 2004, 5, and 6. Construction activity, we'll take a long look at construction activity. It's still very low. We overbuilt it between 2002 and 2007. The shortfall that we issued between 2008, since 2008, is larger than that excess that we overbuilt between 2002 and 2007. We are still well below demographically supportable housing production levels. Construction's going to go up. The market's going to work. It's going to respond. We're going to see a lot more construction in 2014. Low inventory, people are going to start building.
My name is Mark Williamson. I'm the owner of La Plata Development, LLC.
My name is Steve Martin. I'm the president of the 2014 Home Builders Association of Southwest Colorado and owner of Edgewood Construction.
So yeah, it's been a little bit of a bumpy ride lately, certainly since 2008. But what I've seen is that the values in Durango, in the town, have always stayed relatively stable compared to the other parts of the county. I think people really enjoy being in the downtown area. So that's where I've concentrated most of my efforts, certainly within the last 3 years. So things are looking better this year than I've seen them, since prior to the collapse in 2008.
Well, one thing that hasn't changed is Durango's a very attractive place for people to want to be. So even through the downturn, it was always attractive. People have always desired to be here.
Years ago, people were more interested in a 3,000 or 4,000 or even larger square foot home, and I think now people are starting to rethink that a little bit.
I've definitely seen over the long term some changes between the higher end, bigger homes turning to more energy efficient, more practical sizes that are still nice high-end finishes that people expect, but a little bit more livable size-wise.
I think after, certainly in the 2008 to 2010 timeframe, a lot of the contractors and tradesmen left town. There wasn't much going on here, and so they left. But the good contractors are still around. I'm still using the majority of the same outfits that I've been using since I started this, over a decade ago.
Just like general contractors, the reputable subs in town found a way to restructure and get through the downturn, and some of that was downsizing. And definitely the beginning of last year, when things started to pick up and picked up at a rate I don't think anyone expected, there was a shortage of labor. And still today, we see that, although most people have geared back up. Generally, this year looks like it will be a continuation of last year. There's been no visible slowdown and doesn't appear to be any coming up. I think a combination of there's still maybe a shortage of surplus of existing homes, interest rates are still low. The weather this winter has just kind of given nobody a chance to pause. So it looks like rolling into spring, summer of this year, it will continue.
Single-family residential permits, our construction market was real strong, 2000 to 2007. We're building a lot of homes, especially out in the rural county, that purple line. Recently, it's fallen. Down in 2009, that total is about 125 versus 450. That's a big drop. It's come back up in 2013. Come back up quite a bit. It's come back up from 150, came back up 30%, but it's still well below where it was. I happen to think this tells the picture the best. This is the number of single-family building permits were permitted in the county since 1976. We bottomed out in 1988. It's about the time I got into this business, a little bit past that time, but we went back up. None of that was as bad as it's been here for the last 5 years, last 6 years. It's been really slow in the construction industry. I think it's about to pick up. I think they're going to respond right now. In fact, some of my year-over-year predictions are predicated upon, and sort of the wild card is how fast can it pick up? How fast can they start bringing this product? Because I'm not sure they can bring enough. Population growth continues at anywhere near the rate the state says. I don't think they can bring enough in 2014. They can produce as fast as they can. I don't think it'll be enough. Mark was right. New average home size in La Plata County fell from about 2,300 square feet, these are the homes sold in 2008, down to about 1,700 feet in 2013. It's gone up a little bit year to date, but the last 3 or 4 years, it's quite a bit lower than it was. So Mark was right, the size of homes is going down. Who knows what will happen in the future. Multifamily permits are very low and have been for 5 years. That's why one of the big reasons why we do see such low vacancies in the apartment rental market. We just haven't built any apartments. Now I think you're going to start to see that going forward in 2014. But again, I'm not sure it's going to be enough in the near term. And how quickly can that happen? If someone starts a foundation for a 40-unit apartment complex today, that's not going to be available for at least 12 months. It's going to be a while, so we'll see what happens. The number of units constructed in the city has been pretty low for the last 4 years compared to where it was prior to that for the prior 8 years. This is the total number of units, and this low point, this number of units being constructed in the last 4 years, is far less than what that demand, than what those population, household growth numbers require. Look at it on a county-wide basis, Ignacio, Bayfield, Durango, and rural county, total production, single-family duplex and multifamily residential unit counts, it's very low. It has been very low since 2008. It's been about 250. If you go back to what I was projecting, I was saying we need about 300, maybe as much as 400 or 500. We're not doing that. That's why that inventory numbers come down so low, and that's why that apartment market is so strong. State of Colorado, same situation, sort of same picture. In blue, this is the number of housing units that were permitted back in the 2000s. So this is households in red. We way overbuilt it. The entire state was way overbuilt between 2000 and 2006 or 7. But then things started to change. Number of permits went way down, but that household growth continued. That household growth was strong in the statewide between 2008 and 2012. So if you look on the Front Range, what's going on? Those houses are selling very quickly. Rental rates are going up very strong. My son and his girlfriend were saying that rental rates around the Denver area are going up every 6 months. Because they can. They didn't build enough. And this is why. This is the picture right here. Well, the same things happened in La Plata County. We way overbuilt it back here, 2001 through 2007. But then, this red is household growth. Now, the state demographer looking backwards, looking in the rearview mirror, can tell what happened. Going forward, I'm not sure they're right. But the combination, an average between these two numbers is probably somewhere, all right in here, 300 and 400 units. I'm not sure we're going to do 650 or close to 700. But even if we do 350 or 400, we're not doing anywhere near that. So inventory is low. Rental rates are going up. That's why those vacancies are so low. As a percentage of total residential building permits, nationwide, it's about 23%. And that's only apartments. So on a national level, 23% of the building permits issued are for apartments. That's only apartments. Locally, our average has been 12%. And that includes apartments, condos, and townhomes. We haven't been building enough. The state demographer, State Division of Housing, does a quarterly survey of the apartment market in the city of Durango. And so someone from either University of Denver, and they also share that responsibility with 3 consulting firms. So the state must pay them. I'm not exactly sure how it works. But they do Durango on a quarterly basis. So back here in 2012, they said that rate was 1.5%. In quarter 3 of 2013, they said that rate was 4.3%. Well, at that time, they surveyed, and the survey responses they got 260 responses. We did our own in-house survey in my office in December of 2013. We surveyed 540 units. We found 4 vacancies. There were 4 vacant units in December. Now that fluctuates, but when we did it, and it was over maybe a week or 2 period, there were 4 vacant units. That's less than 1%. And that survey response was more than what they get at the state level. So I'm pretty confident that that vacancy rate right now is well below 4% in town and in the county, and the apartment vacancy rate's really low. If you look at the college plans to grow 900 plus or minus students within the next 5 or 10 years, where are they going to go? I didn't want to live on campus when I was a sophomore, I can tell you that. And no offense, but I didn't want to live out in Three Springs either. I wanted to live right close to town where I could walk to school. There's not a whole lot for them there. Probably got to build some more. Commercial construction's been pretty low for the last 4 years. I actually think that's a good thing. We haven't overbuilt the commercial market. You look around, the retail vacancy rate on the retail side is pretty low, probably below 5%, believe it or not. We're about to see a pretty good uptick in the office vacancy rate. We'll see what happens there. That may take a while to absorb that space as Mercury vacates the space that they're in over in the tech center. See how long that takes. Total annual construction permits, though, 1,000 versus 2,000. Construction industry's been pretty darn slow for 6 years. I think that's about to change. I think the contractors are about to make hay. I think that's about to go up. I think the market works. Demand's going to drive and make sure construction happens. So, what's my summary? My big story is inventory. That's what I've been talking about most all night long. Supply is low. But demand, that population and household growth, remember that drives that housing demand. That demand is strong. And according to the state demographer, it's going to be really strong. And according to me, it's going to be pretty darn strong. So I think it's going to be strong. Construction activity is going to go up. If there's nothing out there for sale, if there's no houses for sale, you're going to see the builders respond. The market's going to respond. They're going to start figuring out where to build those homes, and they're going to build them. I think that median price will rise. And I think what we'll start to see, as that price rises, we'll start to see more willing sellers and some more increased inventory from the existing home side. I don't know, again, I really don't know what impact these mortgage rules are going to have. Will it stall out the market? I don't know. I don't know how that's all going to shake out, but I think we're going to know within the next 3 to 6 months. We're going to have some better idea. The lenders are going to have a better idea of what's going on, what the impacts are. Short term, the headwinds are the lack of inventory, the lack of supply. How quickly can they build that new home? If you start a home today, like I said, it might take 6 to 9 months before it's available. Mortgage rates might go up. That might be a little headwind, and that mortgage regulations. But long term, the fundamentals are going to drive the housing market. Population and household growth are strong. They're going up, so demand continues. Rising natural gas prices, that's going to affect the pocketbooks of 6,000 folks or more in the Plata County. That's a good impact. Might impact the county tax revenue, the county services, might get better. And ultimately, we all know that tourism, they're going to keep coming. They always do, and they have since 1976, since my numbers show. They've been coming for a long time. They're coming back. The place is too desirable. People love it here. So do we. So where are we? Last year I said I was here. And I was pretty sure the realtors were right here. They had hope and relief that they saw something happening. Well, I think right now, the realtors are somewhere between here and here. They're getting excited. They're a little concerned about that inventory, but they're going to talk some more people into selling some houses. That's going to happen. So I think we're in a good place. I think the market's in a good place. I think it's healthy and pretty strong, and things are looking up. So we want to thank you guys for coming. Thanks to your folks, and thanks to Mark back there, who does the videos. All the local town, city, county, state government employees who helped me make this presentation possible.
Thank you again for coming tonight. Thank you to our sponsors once again. It's all going to be on the internet, wellsgroupdurango.com. The password is forecast 2014. The whole presentation will be on. It'll be video. Remember, this stuff is copyrighted, so if you need to use it for your own personal use, you need to get in touch with Mr. Allen, and he'll do that. Again, thanks so much for coming. Questions down here? The smart guys will answer your questions. Thanks a lot.